Let's do a quick analysis of the DAX chart and let's talk about trend channels. So I'm not going to go too much into basics, but to draw a trend channel, when the price is bullish, you want to connect swing lows with the swing lows, and then on the top you want to connect a swing high with a swing high. So sometimes you can just connect a channel like so, and you can just copy that line and move it forward to make a parallel channel. So that can be your parallel channel. So from here you made your parallel, just move it up, or you can use there's a tool in there. In any charting software you can have a parallel channel available to you. Use it as a guideline. They're not the holy grail lines, but of course when they align with support resistance like this, kind of make a lot more sense. Now whenever you see a strong move down like what we see right now, let me delete these. What you see here is also a channel, but it's very strong move, so the channel is not going to be visible, or you won't be able to draw it on this time frame, connecting the lows, because all you have is one swing down. So if you go to that 1 minute chart, you would see that even every strong trend move, so that was a strong trend move, a strong trend move underneath will have a tight trending channel. So here you go. So if we do the same thing like we did before, connect that high with this lower high, let's suppose we do this one here, and then extend it further, roughly it becomes that. And if we copy that, move it forward, see, this is a parallel channel going down. So keeps touching and touching and touching, and what it does is that if you have this channel in place, then when price comes out of it like it did here, you know that now it's going into a range. Now if you're using the setup one template, you will see that price will now go inside the gator and it will start to box itself. That's another way of looking at it. So if you're on the 5 minute chart, I'm going to delete these lines now. As price comes back, so you see a very strong impulse trend move. This is going to be a one big huge candle. So as you can see on the hourly chart, it's a trend candle. So a trend candle becomes a trend move on the 5 minute chart, and it becomes a tight trend channel on the 1 minute chart, right? Like so. So let's go back to the 5 minute chart. As it comes back up, creates a new swing high. If you connect these two, it's still going to be very tight. Then you could have connected these two levels. So you see when price came down here again and tried to break this low, and it fails, now you know that it's going to go into a range. So if I mark these two here, that's your swing high. This is a failed breakout. Now you're in a range. So go to the 1 minute chart to see inside. If you see this inside the 1 minute chart, we can see that it's going sideways. So around this time from here to here, it was a sideways channel, if you like. You know, you can even draw it like this after this point here, or when this point was your first swing high was here, you drew your line, it was like that, and from here it was a wedge, right? It was a triangle. You tried to break it but couldn't break the low, so it came back up. So when you start drawing these trend lines, you will come across channels that go parallel, and then you will come across channels that actually come together like this. They converge, and price tries to break out of it. In these kind of convergences like what we see here, I hope you can hear me correctly. When it tries to break it, it fails and goes round, but at the same time it tries to break the high of this channel and doesn't break, you know, and reverses and goes on the other side, because it was a sideways boxed market as well. So now once that was done, I was short, by the way, over here, and I got out with not much because I wanted to let it run all the way. So I was short here. That's my new swing high after this move down, but when it failed, I knew it's coming around, so I got out here. So the short only got me about 12 which is like 1 hour, not too bad. But what you can see is that it developed another channel, right? Which we could do from connecting these lines, this and that. And we can connect this with that, or the previous low over here. Here what you see is a very interesting feature. You see, first you'll be connecting these two lines. Let's connect that line with this one, right? So if we connect these two, it's creating what we call a bear channel, right? But it's converging, and this is where your AO will start showing divergences. So this will be your divergence, this will be your divergence, and it indicates that it's going to turn around. So if you monitor your price this way, and I do all of this without drawing any lines, I just look at the price and I just see these levels. So I saw this level going back up. This did not break the high of that, so still bears were in charge. Price goes down, gets rejected, and I know why it's happening, because we see levels on the left. See that context of the hourly chart. We already had these levels in place. My main target was 15115, and just short of that it turned around. So to train our eyes, you can imagine the price in those trend lines. Draw these trend lines like so. See over here, it was this one, and then when this low was created at the end of this candle, you now know that it's properly convergent. So when it breaks over here, it usually will start to go. So around this candle or this candle, if you went long here, your stop loss can easily be below the swing low here, right? So if it's below this, you have 25 stop loss, and then you let it run. You already have like a 2-hour trade running on this. Otherwise, when you saw trend candle, kind of doji candle, and then kind of trend candle, and you have this one pause candle, let's call it. This is a one candle pullback. You can actually trade when you see a series of trend candles, and this happens, you can actually buy the low of this here, or buy the close of this bear candle within an uptrend, and then have your stop loss obviously initially over here or below this candle a bit further. So you want to let it come down a bit, right? Otherwise, as soon as you see the next candle with a bear, this is a trend candle, because there's absolutely no wick, and there's a little wick at the top. So at the close you can be long, and then your stop loss is down here. I like this method a lot. So if you go to the 1 minute chart, this itself was a beautiful 1, 2, 3, 4, 5, 6 candle pullback. So if I put the KC on this, do I have it here? Here we go. If you put the Hunt 2.0 template, and you've done that analysis, now it's easier for you to drop to the 1 minute chart, and you see this 5 candles down, and then you have a cherry right at the center of the channel. You go long here, and now your stop loss is only 7 or 8 points. You let it run, you're still in this trade. So this combination of the 5 minute and the 1 minute chart, based on those analyses, is just fantastic. Like today, when you saw the strong rejection to the left, refer to the other video that I posted earlier, started to go down. So if you were on the 1 minute chart, all you needed was a pullback, which we saw here, and the pullback also is the 1, 2, 3 KC method, right? Comes out, pulls back, you're short here, all the way here. When it closes above the band, you get out. Now here you could have gone short again with the view, if you're a little bit expert, that now it's moved too much, we could do a scalp here. So you will have a scalp entry targeting these levels, then you get back in targeting these levels, and then you get back, probably not long. You know, this is where the cherry is a little bit too aggressive for you, but you know that the market is going sideways right now, but overall it's still in the downtrend, so you still stick to it and you let it guide you that way. And now, since you were looking at that analysis that we just did before, if you waited for it to turn around, this was then your other entry. So you can either stay on the 5 minute chart, you can either stay on the 1 minute chart, or you can play around with both of the time frames and get better entries. The channels will help, or you can have the KC on it and you won't have to draw any of those channels or anything. You don't need to draw those channels, but we need to understand the concept of how to read the market, and that's how it can be done. So for me, I just have it like this, and my mind's bright and clear when I'm looking at chart like this now. Probably a year ago, if you asked me to do it this way, I would have screamed at you, but it makes more sense to me. Anyway, I hope this helps.